Fine.
Send you a link. I'm testing the stream now.
Right, let me go pee quickly. I'll be back.
Mm-hmm.
Back.
Test. Mm-hmm.
Okay, let me test it.
Can you check it?
Yep, I can see you. Nice hair, mate. I can see you obviously did your hair for this.
A bit. Hey guys, you hear me? What up? Alec? Andrew? Andrew? You there? Where's Andrew? Can you guys hear me? I have to test it. Is it too loud or am I too quiet? Shall I turn up the volume of my microphone or is it working? Gotcha. Hey guys, what up? Hope you guys are doing well and you're safe and healthy and don't got corona. I was looking at the vote. One of you has got corona. As I can see. I got corona. 44% has got corona. So I'm waiting for Alex. Bet he is AFK for like 2 minutes, and then we will be back, and then we're gonna start with this. Hold on. Yeah, in this presentation, I want to give you a little insight into not only the volume profile, but also how the market moves. Because the problem the problem is that trading is not as easy as most of you people think. Because what we learn is technical analysis with trend lines, with support and resistance, and maybe Fibonacci. Maybe we add Fibonacci to it, and that's it. And then we look for candlestick patterns, right? But the problem is that trading is not that easy, and that the big players like hedge funds, like banks, and all the big players, all the sharks out there in the oceans know how we trade. And that's a big problem for us because they know what we do. And the problem is they need our contracts. They need to, let's say, stop us out in order to fill their position sizes. But we will talk about this as soon as Andrew is back. So I don't want to disappoint you if you just believe into technical analysis and into trend lines and into support and resistance. But that's just the reality, and the reality can be, painful. And but I hope that you can improve your trading with the upcoming content that I'm going to show you. Andrew here. I see Lynn 85 in it. Man, turn on your microphone, buddy. You have left the session. Why did you leave the session? Join the session, buddy. I need you here in case of, if you got something to add to it. Do you still have the link? Still have it? Come back, buddy. Okay, never mind. Mario voice.
Hello, can you hear me?
Yeah, can you hear? Can you hear the Andrew? Can you hear Andrew? You should be able to hear him now. Okay, Andrew, let's start. Can we start? I think we can start. Okay, let's start with the volume profile. Before we get right into the volume profile, it is very important to me and to Andrew to let you understand how the market actually moves, because it's not just support and resistance, it is way more than that. So we need to start from the scratch. If you know this already, maybe you can learn something new about this, but we want to take a look at the order book right now to give you a little impression how the market actually looks like, and how the professional traders or the institutional traders actually trade, because they don't just look at the chart. They use the chart to prepare themselves for the trading, but when they trade, they would always look right at this, and this is the order book. I will explain you the order book. But first of all, you need to understand how the market moves. And it's pretty simple. I bet you heard this already. The market moves with supply and demand. So if we have more demand than supply in the market goes up. And if we have more demand than supply, the market goes up. And if we have more supply than demand, then the market goes down. Now, this is very important to note. A buyer always needs a seller, and a seller always needs a buyer. This is very important to note right now, okay? Because I will ask you some questions later on. I will ask you questions about this. Okay, let's take a look at the order book. By the way, this is how I trade. The day trades and the scalp trades. So the market is closed right now, means we cannot take a look at the order books because there's nothing happening. And this is why I have this screenshot I want to show you, and want to show you what you actually see. Okay, so right here we just see the volume. This is what you will always also see in the volume profile for each price. This is the horizontal volume. We're not talking about the vertical volume. We will add this later on. Okay. Here you see just the price of the asset. Okay. The blue line, this bid line, shows the buy limits. A big player can always see how many buy limits are placed for each price. It means he can clearly see what's going on in the market. And I have to mention that they have access to prices and softwares we can never ever afford. Yeah, they pay a couple of grand a year just to get these informations. We will never have access to these information unless you have a lot of money and you can pay for it. Okay, so right here you see the buy limit orders for each price. Right here you see the bid trades. The bid trades are the market orders, the market sell orders, all those who sell with a market order. All right. Here the ask trades are the market buy orders. Right here. These are those who just buy with a market order. And on the right side, we can see, on the ask side, we can see the sell limits. It means we have a nice overview about the current market situation. We can see where a bigger amount of contracts are placed and can see a tendency into one direction. At least that's what they want to sell us. That's what the big players want us to believe. They want us to believe that as soon as we see a big order in the order book, like that one, you see the difference? There's 91 contracts on the sell limit side. They want us to believe that the market goes down here. Okay, keep that in mind. It's very important. Keep that in mind. Okay, so to let you understand, it's very important. Limit orders are these typical support resistant orders that you see. They don't move the market. Only the market orders will move the market. So let's take an example here. If the market moves down, to this price, 1,252.9, and as you can see, there are 29 contracts in it, right? This price is a support as long as there are not more sell orders than 29 in it. As soon as this 29 gets absorbed, the market goes down. If there are more sell orders, more than 29, then the market goes down. But if there are only 28 or 26 sell orders, then this price will stay a support level. All right, understand this. As soon as the market hits a buy limit order, or the price of a buy limit order, the buy limit order turns into a market buy order. Okay, and if we have more market sells than market buys, then the market will break through this support. That's how it works in the market data. You need to understand this. It's very important when we head to the volume profile. Okay, so and the other way around, if you have 29 sell contracts or sell limits here, and there, let's say 30 or 32 buy or market buys, then the market will move up. It's about the absorption, okay? If there are more buys than sells, the market goes up, and the other way around. So when we look at the markets, then we can see there are different market conditions, and I wanted to talk about two different market conditions we will see in the chart, okay? So there's the price discovery mode, which is this typical range that you see in the morning when you look at for example, the London session. Then you can clearly see that the market is ranging between the cash or the time frame of the opening of the cash market and the future market. In this discovery mode, the market tests different prices to attract buyers and sellers. It's usually a volume area, and the market tends to occur around support and resistance, and it's just ranging. All right. Then there is another condition, which is a balanced market. It's actually just a market which is not moving. When you see that the market does not move, then you know, all right, it's a balanced market. That means that supply and demand fluctuates around the point of control, and demand and supply is equal. And this is where a lot of business is happening. Yeah. And very important is balance always leads to imbalance. Keep that in mind for the charts. All right. So, when we trade, we are like, or when we trade, we are like this little guppies in the ocean, and we always trade against the sharks. And our job is to identify the sharks and follow the sharks. All right. So there are big disadvantages the big players have, which is, and I think no one would see it that way. No one would see that a lot of money is a disadvantage, but in fact it is a disadvantage because they need a lot of liquidity to fill their position sizes. Yeah, do you know what slippage is, guys? Or do I have to explain slippage? Let me know. If you know what that is, then I will not explain it. No answer so far. Explain, please. All right. So I've just explained to you how the market moves, right? The limit orders and the market orders. And if you want to get a certain price, right, as a buyer, you need the seller. Let's say you want to buy 40 contracts and there's a seller selling 20 contracts. Means you are causing more demand than supply, or than available supply. What happens is that the market goes up and you only get 20 contracts for the price you actually wanted to have. I'm lagging. Am I lagging very hard? Then I will probably have to quit the Hangout session. Do you guys understand me or not? Just the chat. Okay. Okay, if you don't understand me, please let me know. Okay, no lag. All right, okay. So it means, like I just said, yeah, you want to buy 40 contracts, but there's only 20 contracts offered in the order book. And you cost more demand than supply. It means the market goes up and you don't get 40 contracts for the price you actually wanted to have. Yeah, means you get the next contracts for the next available price. Yeah, let's say you want to buy gold at 1,000. Yeah, these 40 contracts, and there's only 20 contracts on the sell side. You push the price up to 1,001 because there's another seller who wants to sell 5. All right, so you get another 5. Then the market goes up again because you are still causing more demand than supply. There's another one who wants to sell 10. So you're going to get these 10, but there's still 5 you need, right? So you push the price up again and you get your position size filled. Means you are pushing up the price and don't get all the lots or the contracts for the price you actually wanted to have. This is slippage. All right, I think you guys know this. For example, when you place a buy limit order or a buy stop order, and the market suddenly pushes up or goes down, and you don't get the entry you actually wanted to have. This is slippage. And this is very, very expensive for the big players because they don't buy one lot or 0.5 lots or whatever. They have millions or billions they move. And if you suffer from slippage, then it's going to be very expensive for you as an institutional trader. All right. So they want to avoid slippage. They need the liquidity, yeah, to fill their position sizes. If there's, they always keep it balanced. Okay. So you will never see, or at least I've never seen, I've seen that you will never see a valid big order in the order book because they have to work with order flow. Means when they see there are 20 sellers, they buy 20. Then they see there are 20 sellers, they buy another 20. Then they see there are 10 sellers, then they buy 10, and so on until they have their 500 or 1,000 contracts. What does that mean for you? It means if the market goes sideways, then I don't do anything. All right, because the market is balanced and someone is accumulating volume. And this is how, or this is why we have these consolidations during the market movements. Because the big players, they are collecting all the lots. And if you are the one who's selling him the lots or buying the lots, then you are just doing him a favor because you are giving him what he needs. But you never know what he's going to do. Is he selling or is he buying? You never know. Means as soon as we are inside of a consolidation and we buy or sell, yeah, then we are just gambling. We don't know whether the big player is buying or selling, you know? So keep that in mind because it's very important for the upcoming explanation of the point of control. Okay? So like I said here, they have to hide, all right? They cannot just place that big order because everyone will see it. For example, let's go back to the order book. Holy shit. What happens? Let's go back to the order book. Hold on. I'm stupid. There's a lot of shit going on in the market, I'm telling you, because there's something called spoofing. If you look at the order book and you suddenly see, let's take this price here. This is the point of control, by the way, because you see there's a lot of volume. So 1,255. If you suddenly see, yeah, let's say the price is here, yeah, and you suddenly see there is a huge order of 500 contracts, yeah, then you can be sure that this is spoofing. Means there's someone who actually wants to sell. When the price goes down, yeah, the big player removes the order before it gets filled. Why? Because they know there are a lot of front runners in the market. Means a lot of people who trade with the order book see, all right, there's 500 contracts, the market will go up as soon as the market hits that price, and they front run and place a buy limit in front of that price right here. And what happens is they get dumped because they remove that order. They know there are a lot of front runners here. They all buying, and what they do is they sell. You buy and they sell. Because they want you, they want this liquidity. They know, all right, all of them, they're gonna front run. There will be a lot of orders that we can sell, and the market goes down and you immediately get stopped out. This is the game they play with us. And you need to understand this. It's not just trend line support and resistance, it's also important, but you see how they just play with us and how they try to dump you every single day. Okay? So these are the important facts you have to know before we head into the charts. Did every one of you understand what I just have explained, or do you have any questions? Think about it. Maybe you got questions. I give you like 1 or 2 minutes. I'm gonna get me some water, and then I'm back in two minutes. All right. Very important that you understand everything. Okay, I got me some water. Got me some water. Okay. Okay, let me check the chat. All okay so far. A lot to absorb. Yeah, that's the problem. The problem is, and I mean, I pay for that experience a lot of money, is that we just learn how to read the charts, but all of this is actually just preparation for the trading. And the big players, they know what we do. They know exactly what we do. And I will show you how I identify the big players in the chart right now. But first I want to read the chat. Yes, this is why I spend so much time analyzing the market. Don't just look at the charts. Note it, and based on what we determine. Great information opened my eyes. A lot of these big guys. Yeah, you need to know this, guys. Otherwise, you won't survive the market. It's just a game they play with us, with the retail traders. I'm telling you. Where are you from? I'm from Germany. Yeah, like Andrew just said. Oh, there's some noise. Sorry, guys. Corona. Everyone is home. There's some noises in the background. But okay. So now you know how the big players dump you every single day. And they are forced to do this because imagine you would have a hedge fund, or you would be a hedge fund manager, or you are a bank and you have a lot of customers and they want to see results, right? And now you have all this money and you want to buy, right? You want to buy and everyone else is buying as well. What do? You manipulate the market into your favor, right? And this is how these typical fake outs are happening. I want to give you an example with USDJPY, for example, before we head into the volume profile, just to let you know what they do. And it's exactly this. Look at that. This is a very strong support in the bigger time frame. A very strong support. Look at the game they play. Look at the game they play. You always see these fake outs. Look, fake out, fake out. And recently, a fake out here as well. And what they do is they see that people are buying in this area here. People are buying here in this area, but they want to buy as well. So what they have to do is, instead of buying, they place a huge sell order and dump the market to the downside, down to your stop loss levels, which are somewhere around this area below the support level. They know where you place your stop loss levels. And as soon as you get stopped out, your buy order turns into a sell order. And this is providing a lot of liquidity to the big players. And additionally, very important to note as well, is that there are market players, retail traders, who are just waiting for a breakout below the support. Yeah. So if you are short or you want to go short, you would wait for a breakout below this range, right? And now you see this breakout, the market goes up again, you place your sell order, and this is the perfect moment for the big player to buy. And suddenly you see, okay, there was a breakout, what's happening? And the market goes up against you. You're going to get stopped out, right? You out of the game. All those who were long get stopped out, and suddenly the market goes up and you feel like, shit, I was right, but the market goes up without me. Why? Because they dump you. Because they need your liquidity. They need your stop losses. You understand? Very important to understand how they try to dump you. Okay, let's head to the volume profile. And I'm going to switch. Hold on. Let's stay at USDJPY. Let's open the volume profile. We will not talk about the vertical volume yet, because this is just based on time and this is based on price. Okay, and want to show you the structure of it and what it actually means. So let's get into the smaller time frame. Okay, so first of all, you need to know what you see. Hold on, let's take that one. That's a good one. Okay. Gonna change. Make it a bit smaller. Let's keep it like that. Okay. So in the volume profile, you first of all, you need to understand that the volume profile is not an indicator, yeah, because it's not, calculating anything, and not like the MACD or the RSI or any other indicator. All right, all what you see are just the amount of transactions. All right, you can also, if you want, you can add, what was it? Show value. Yeah, you can add the value to it. It's not indicating anything yet, probably because the market is closed. I don't know, but you can see the numbers of bids and asks here. This is also like a typical footprint chart. There you can see the bid and asks inside of the candles. All right, so what you see now is, I need the brush. Where's the brush? I never used the brush before. There. Okay. What you see is, first of all, this black line. This is the point of control. Yeah. And the point of control indicates where most of the transactions took place. Yeah. This is where most of the traders were trading, where the business happened. All right. Very important to note. This black line, or the biggest candle here. Okay. So this is the point of control, and shortcut is POC, point of control. Okay, now we have a low volume node. This one, you see there's low volume, called, or shortcut is LVN, low volume node. Okay, this area where you see there is no volume compared to the volume here. And all this, I now have the line chart here, but you can see there's higher volume. This is called a high volume node. In short, HVN, high volume node. And this is a high volume node as well here, HVN. That's all you need to know. Point of control, low volume node, high volume node, and high volume node here. Okay, so I have a question for you. Based on that, what I just talked about the game the big players play and where they would buy and sell, would you sell or buy at the point of control or not? I would like to know. What do you think? Right at the point of control, you can see, oh, look, nice support, nice support, nice support. Oh, look, nice resistance. Would you buy or sell here at the point of control? No idea? Because I see no answer. I can tell you that most of the traders do it wrong. I've seen a lot of videos on YouTube, and what the traders do, or what they do when they explain the volume profile, is they say, hey, there's a support, go long. And if you have the next point of control here, go out. Depends on how much balls you have. This is what you learn on YouTube. Buy this point of control because it's a support, and sell here. Now, important to note is, this is not this entry-exit thing, this point of control, or this high volume. Yeah, you can use it to or you can add it into your analysis, right? But it's not how it works, because based on what I've just told you, yeah, which is that the big players need the liquidity, you should not execute any trade at the point of control. Never, because this is where they eat your contracts. This is where they place all the small market orders, where they accumulate or distribute the volume. And this is why I wanted to show you the order book. I wanted to show you how they work. All right? Because this is the perfect, or this price is the perfect price for the big players to do their business. right? They see there's a lot of going on, a lot of sellers, a lot of buyers, so I'm going to go short. I'm going to you never know what they do, but you know they are big players doing their business. And you don't want to be in a market which is not moving. This is a balanced market. Look, it is balanced. We don't want to be in a balanced market, because when I place my order, let's say you buy one lot, the big player will just take it. But you don't know whether the big player will go long or short, right? So what we do is, like in this typical range breakout strategies, is we wait until the market moves away from the point of control. Do not listen to people who tell you to buy or sell the point of control, because you will lose your money. The big player will just will say, thanks, buddy, thanks. Yeah, give me all what you got. I need it. Come on. I still got 2 million to fill. You know, it's senseless to execute at the point of control. Note this. But the point of control is a very nice tool to identify the power of a trend. Because now we want to take a look at the bigger picture. And I want to give you, I have prepared this this scenario, and then we talk about these market conditions. So now let's have a look at the bigger time frame. See, we had a downtrend, right? Let's not look at the volume. You see there's a nice downtrend here. Yeah, it's going down. So technically you would just mark up a trend line here, right? Like this. Then you see, all right, nice. There's a fake out. By the way, look at this fake out. Very nice. Very, very nice. The perfect confirmation for a short trade, because this is where the big players stop you out. They know all of them, they're short. All right, let's stop them out, take the liquidity, and then we short it. You see? Perfect. So we see there's a downtrend, and now the market just ranges. And this is how you combine this, or can combine the volume profile with your technical analysis. All right. So what kind of market condition is that? It's pretty balanced, right? The market is just, or the market is kind of like in this price discovery mode, because it's just ranging, going up, going down. There's resistance, there's support, like that. Hold on, like this. Yeah. Resistance, support, resistance, support, resistance, support. And now we take a look at the volume profile. And what you see is, look where the point of control is. I have to mention that each volume profile shows one session. 1 day, 1 day, 1 day. Okay? I'm gonna increase it, the size a bit. So, but now look, very interesting to see that the point of control of this session and this session is equal. What does that mean? Someone is accumulating volume. This would be the first evidence for me that the market is about to turn around, to break this downtrend and go to the upside. All right. If you combine this with the trend line, you would have another very nice evidence, because as you can see, marking up the trend line, or when you marked up the trend line, then you see there's a breakout happening. Look here, there's a breakout happening. Now we can use the replay tool and go to this point. Okay, so we see the point of control used to follow the price. Look, the volume was always high when the market went down. Point of control, point of control, point of control. And suddenly the market did not, or the volume did not follow the moves down anymore. Point of control, point of control. Market is balanced, not imbalanced anymore. Means there's something happening. Time to stay out. Time to take the profit if you were short, and to stay out and to see what happens. All right. So let's use the play button and see what happens. Technically, you could say, I can't change the time frame now, because then TradingView will close the replay function. Let's say, okay, there's a range. I'm waiting for the range breakout. I have this evidence. Yeah, the point of control is equal. There's something happening. We are in this price discovery mode, and the market is pretty balanced here. I'm gonna mark up this trend line and see what happens. I have this trend line and this trend line, and now we see there's a typical contraction. Look, a contraction between this trend line and this trend line and this range. There's something happening. This is the quiet before the storm. Let's press play and see what happens. So market goes up, and what you see is with the next session, look at this, the next session has ended here. With the next session, the point of control is higher than here. First evidence of a breakout. Look. Now the market just violated this trend line, but is still at the top of the range. Still not time to get in there. We have to stay out and see what happens. Now we see the sudden breakout. Yeah, now we have to get the confirmation for a breakout. This could still be a fake out, right? But there's still evidence that the market goes up because point of control equal higher, breakout trend line, breakout range. Now market goes down and retest the point of control. What I want to see now to have a confirmation for this breakout is that the volume follows, yeah, this breakout. I want to see that the big players are following this breakout. Now what I see when you look at the volume profile is there are a lot of sellers in the market. Look, you see this? Lots of sellers here. The red candle is way bigger than the purple candle. Now we can add the vertical volume and check this. Look how big the sell pressure is here. You see this? So the point of control did not follow the market yet. This is the 1 hour chart, by the way. And we see there's a lot of sell pressure here. Look at the small candle and this big candle, the volume. Look. This would, this is when I feel like, okay, there's something wrong. Okay? So let's see what happens. Market goes up and you see there's a lot of sell pressure. Buy pressure is decreasing. There's in these two candles, yeah. There's no buy pressure here, you see? And suddenly there's a huge sell order filled. The market moves back below the point of control. The point of control has followed up, but we see there's a lot of sell volume. This is still, yeah, a price where I don't want to be invested because we know there's something bad going on. There's big players doing their business. All right, we are at the point of control and there's something wrong because we see a lot of sell pressure right at this resistance. Yeah, a lot of sell pressure, point of control following to the upside, but a lot of sell volume. Stay out. Market goes down back to the trend line. Yeah, to the low volume node means there's nothing happening. The market could instantly just break back below this range because there's no volume, there's no counter strike. The market usually tends to break through the void. This is the void where no volume, or where you can see very, very low volume. But there's this point of control. This is where one of these big sharks was accumulating volume. All right, so this could be a very nice chance for the big player to stack up the position. They see there's a breakout, a typical retest, and now we are back at the low price or close to the previous point of control. There's a chance for the big player to stack up the position. And now see what happens. Market goes down, closer to the point of control. We see sell volume is decreasing. Look, sell volume decreasing here. The vertical candles. Now technically, yeah, if you would not have the volume, you would just see the range, yeah, break out of this trend line. Then you see this breakout out of the range, and you would say, all right, that was a fake out. Market will stay in this range or the market will go down, right? Because you don't look at the volume. But now we see decreasing sell pressure. Yeah, back at the point of control with the big players we're accumulating the volume, and they will not just give up now. They won't say, oh no, we were stacking up positions for 2 days now, and though the market goes down, we will close the position. They don't give a shit. They will use the chance to buy more. Okay, so market goes up again. We see less volume here, right? Back above the point of control of the current session. Market just going sideways, retesting this resistance, and they slowly stacking up more positions, more volume coming in slowly. Point of control following to the upside. Market dancing right at the point of control. We don't do anything here, and the market goes up. And here you see clearly how the point of control's going to the upside. Yeah. There is no volume anymore, as you can see here. Not yet. We're going to take a look at the point of control and how the volume develops. We are back above this range, above this trend line. Yeah, we were retesting this trend line, retesting this point of control. The big players were accumulating volume. We see there's more buy pressure coming in. Look here, 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 and see how small this candle below the point of control is and how big the volume is. He's hiding. He is hiding. He knows. Lots of people will sell here because this is a range. Yeah. Look at the range. This is a range. Lots of people will sell here. And he's stacking up. Sneaky peeky like. He's stacking up the positions. And the market goes up. Point of control following. You see how the market just broke through the void? See that? If there was suddenly a lot of sell pressure and a lot of volume up here, then you know, all right, the big player who was buying here is now selling. Why? Still, he needs a lot of liquidity to get rid of all the contracts. I mean, he does not only needs a lot of liquidity to buy, he needs a lot of liquidity to sell. And as soon as there's no high sell volume up here, then you can consider that the big player still has his open position. You understand? I hope that's not too much for now. I want to keep it as simple as possible. But you see, point of control following. The market goes up. You see how the buy volume comes in here? See the buy volume. Point of control here. Market goes up. Buy volume here. Buy power, buy power, buy power, buy power. See that? A lot of buy pressure coming in. Point of control following. Now the point of control goes down. We see a lot of sell pressure here. Look at the sell pressure. This is time where, or this is the point where you can go out. You can combine this with your technical analysis. We were taking a look at this trend line. You see the market was retesting this trend line, testing it now again. And as soon as the point of control goes down and we see this sell pressure, then we can just go out. We don't even have to wait for the breakout through the trend line. We just go out. We have made a lot of profit here. You know? Do you understand this, guys? I want to give you time to understand this. I don't do this every day, so take your time. Maybe you have some questions, or maybe you took notes. Take your time and ask me questions. If there's anything you don't understand, please let me know, and I will explain. Andrew, do you have anything to add? We want to keep it simple. We'll take a look at too much now, at fake outs and all this stuff. Just step by step, guys. I just want to give you an example of how it works and how the big players try to dump you all the time, over and over again. Add it in chat. Sorry, I was not looking at the chat. Well, proper iron, proper TL would not have been enough. The buy volume is stop losses getting hit and retail investors buying in. Yeah. And that's the last spike up in price when the big boys were selling. You see what game we play? You will never be, or maybe you can be, but you won't be as successful as those who use the tools the big players use. You know, just chart technique and technical analysis won't help you to make profit in the long run. You need to understand the game these assholes, these rats are playing. We want to catch the rats, guys. We want to catch them. Don't be a victim of these big players, of the sharks. We're just little goopies in the ocean, and they try to eat us. And if we follow them, they won't be able to eat us. Now see what happens here. Now see. The market just retested the strength line, right? Giving a lot of buyers the opportunity to stack up their positions. Point of control followed to the downside. Now, the market goes up. Point of control still following, still good evidence to go long, right? But now, I would still stay out right now. I've made my profit, I'm fine, all right? So, but let's say we're looking for another opportunity. Now look how the point of control, what the point of control does. The point of control was here. Now it's here. It's following to the downside. This indicates sell power. Sell power is what we see. All right. So market goes down. Look where the point of control is. Right here. Market goes down. Now the market moves up again. I would not go long because the point of control followed the bears to the downside during the session. No reason to go long. Even though you see that the market moved away from the point of control to the upside, yeah, it is still very likely that the market goes down. And if you want, you can also, like, take your trend lines and combine this, say like, all right, guys, this is a flag pattern or whatever, and now we see a breakout and the market will continue upwards. But the volume tells me, no, you don't do a shit. You stay out now, yeah, and wait what happens, because it looks like the market goes down. You see the sell pressure. There's a lot of sell pressure coming in. And now, look at this. Very important to understand and to note. We see the breakout away. The market is not in balance anymore. We see that the market moves away from the point of control. And now look at the vertical volume. There's no volume taking place. There's no business going on anymore. Nothing is happening. This means I stay out. Breakout, okay. But no volume, what is happening here? If there was a breakout, then you would see how the market stacks up by positions. But there's nothing happening. What happens? The market goes down again. You see the games they play, stop loss fishing. They distribute volume. That's what they do. They just go sideways and distribute the shit. Now, technically, what do you see? What do you see? If I disable the volume profile, what do you see? And this is how we combine this, guys. We can combine this. That's what I do. I combine everything that I know. What chart pattern do you see, guys? SHS, exactly. This is a shoulder pattern. Now you can say, all right, I'm gonna take a look at the MACD and try to find a divergence. Now, perfectly fine. Look at this divergence. Higher highs, but lower highs here, for example. A nice confirmation for the trade, right? We have the neck area here, or the neckline. So we just wait for the breakout, the retest, and then it goes down. And this is exactly combined with the volume, fundamentals, correlations, and the sentiment. This is exactly what we have done last week. Exactly the same thing. Look, shoulder, trend line, press the play button, look what happens. Exactly what we have done. But as a trader, you would have seen there's a breakout. A trader without volume, you would have seen there's a breakout. All right, the market goes up. No, the market just tries to dump you with a fake out. The big players want you to buy because they want to sell. And this is how we can combine shoulder, head, shoulder, double top patterns, trend line, support, resistance, and all this stuff with the volume profile, and take the volume and the volume profile as a confirmation for what we see in the chart. The chart is just preparation. We have an assumption. We see there's a shoulder pattern, yeah, but we want to get the confirmation. We want to see what the big players do. This is exactly what we have done last week. Analyze the volume, seen, all right, there's a sell pressure, the big players are dumping the buyers. We just wait for the shoulder pattern to get triggered for the retest, then we check the volume, and then we sell if we get the confirmation. That's what we do. Then we look at correlations. For example, I was looking at the DXY. Yeah, I've seen, all right, there's a potential long setup. What happened? It went up. I've seen the breakout in terms of correlations, because we know that the weight of the euro inside of the DXY is at, I think, 57.5%. We know if DXY goes up, euro USD goes down. Yeah, correlations, fundamentals, sentiment, volume, all this stuff combined will give you a very nice formula. A very, very nice formula, guys. So I turn on the music. Let me know what you think. Please take your time if you got any questions. If you don't understand anything about the volume profile, please don't hesitate to ask. I don't know stupid questions. Even if you don't know what buy or sell means, let me know if you got any questions. Don't be shy or embarrassed. Please take your time. If not, we are done for today. I don't want to give you too much now. Say that again about DXY and USD. All right. So DXY is the US dollar basket, right? So it's the US dollar against a lot of currencies. Oh, look at this. We can check Wikipedia. I think the weight of Euro USD was 57.5% weight. So here's the definition. The US dollar index as an index or measure of the value of United States dollar relative to a basket of 4 Asian currencies, often referred to as a basket of US trade partners currencies. The index goes up when the US dollar gains strength value when compared to other currencies. So you see the US dollar against other currencies. Now, but look at this. Where's the weight? Where's the weight? Where's the weight? See, yeah, here it is. It is a weighted geometric mean of the dollar's value relative to the following select currencies. Now look at this. The euro's weight of the DXY is at 57.8%. Means it's actually used the euro. You can say it like that. It's not exactly almost the same, but there's a tendency. If DXY goes up, euro tends to go down. And if DXY goes down, euro tends to go up. You can take that as a confirmation for your trades. You get it? I can send you the link here so you can read this entire article if you want. So if you include all this into your trading, then you will see it's getting easier. It's just not as easy as people want to sell you. Hey guys, get 3 EMAs, get support, resistance, and trend lines, and that's all what you need. No. We do a lot of research, me and Andrew, a lot of research, looking at news, looking at fundamentals, look at what we can expect from the week. For example, when you look at the economy calendar, you can see, okay, what can I expect? For example, if you have a non-farm payrolls week, then you can be sure that it's going to be a whippy week. If you have a week with a lot of conferences like the European Central Bank or the FOMC, then you can it's almost sure that the market won't really move until we see the results of the press conference of the meetings or the interest rate decision, because the market never knows what they're going to say. There are always different type of weeks we trade based on fundamentals. So you have to include a lot of stuff into your analysis if you want to be successful. Can you do us a favor and post the indicators you have used in Telegram? Yeah, I can do this, of course. That's great. Can we have a recorded session? I like to watch over the Jesus better. I think YouTube is recording this already. I think it's gonna be saved on my YouTube page. I will check that out and I'm gonna send you the link. If not, then I have to repeat this again. I don't hope so. I really appreciate the live stream. Thank you. Yeah, you're welcome, guys. So if you don't have any questions anymore, then I'm gonna close the live stream, because I have to prepare the week. I have to take a look at a lot of stuff with Andrew to be ready for the next week. I want to send you guys high probability trades. Nee, noch nicht. I just got some yummy stuff here. Yummy stuff from a girlfriend. All right, guys. Then have a nice Sunday. Stay safe, healthy, whatever. If you like that, you can support me and leave a subscription or a like or whatever. However you want to do it. I see you on Monday, tomorrow. I'm out.